one of the things that Singapore has always been very solid on is their gas supply from Indonesia and Malaysia. And because of that, we've had pretty stable electricity prices. What's happened recently, as you mentioned in the intro, is that supply from Indonesia particularly has been interrupted, and that's caused us to essentially have to import LNG. And we're essentially catching a cold the same as the rest of Asia and particularly Europe at the moment. So, for example, the electricity spot prices have gone from around about $100 to we're peaking regularly above $2,000 at the moment. And if you look at the electricity futures side of things, the current prompt contract October was trading at 78 beginning of the year. It's now trading at almost 500, and it peaked at 900 a week or two ago. So it's certainly something that has caused a lot of disruption in the market.
Sure, but you're saying that that doesn't necessarily mean that prices will continue to rise. Prices could be volatile given the number of players that are operating in the market and the current energy supplies. But my question there is, if you see a major shakeup where, obviously some of the weaker players get out, like 4 entities stepped out and exited the market completely, wouldn't consolidation pave the way for prices to go up?
I think we have to be a little bit careful when we refer to independent retailers as weaker. I think they're a very necessary part of a competitive market. But the problem we have in Singapore is that the way they essentially buy hedges in the electricity futures market, it's been a bit of a process around this. And back in July, there was a pretty significant change to the way futures were supported, and that essentially meant that the futures market's been pretty liquid. So essentially, the independent retailers that have gone essentially exited the market, which, by the way, I think pretty much all of them, apart from one, which is Flow Energy, which is a great outfit from a couple of Dutch entrepreneurs. But I think the way this market's going to progress is essentially all of the independent retailers have exited bar one. And we will end up with a process around the Electricity Energy Market Authority putting in new steps to essentially reinforce that competitive market process. And we'll probably see more independent retailers re-enter the market once those steps are in place.
How long do you expect this to last? You kind of answered the question already, but I wanted to ask about what you expect the market to look like with players exiting now. Do you expect more to continue to drop out, and will prices remain high?
So if we focus on in terms of number of players, no, I don't think any more people will drop out. I think what we've got now is the generators plus Flow Energy, which is the remaining independent retailer. I think the progress forward will be high prices until gas supply disruptions are sorted out. But also, we have to make it through essentially the European and Asian winter because imported LNG will remain high for those periods. So, look, I think we're going to have high prices for a period of probably 2 to 3, 4 months. But this isn't a new normal. But what I would say is that Singapore's electricity prices will become more volatile over time, rather than having the gas prices linked to oil as we have in the past. They'll be much more linked to global LNG markets, which, as you mentioned in the previous segment, are incredibly volatile at the moment.